Okay, well, I appreciate the opportunity to present today, and thank you all for joining. And excuse the background. We're here at a biocarbon production facility, so I'm in the boardroom above the production floor here. So I'd love to talk to everyone a bit more about what all that is and how it comes together. So we can always share forward-looking statements, but at a high level, kind of why invest in CHAR Tech, and I'll go into obviously all of this in a lot more detail, but sort of the high level summary is that we have a de-risked first facility that's now entered commissioning. So we are commissioning the plant, and that is scheduled to be completed in Q1 of 26, so the end of March. So we're getting close to the end there. We have a very clear path to about 130 million in project level revenue. And from those projects, about 42 million in free cash flow from the facilities. And that's across 4 plants. So we'll talk about that. We've been able to attract world-class strategic partners. They've provided validation of the technology. They've provided capital, which has been fantastic. We're talking about a proven technology. And one of the key elements here for us and for investors as well is that the revenue can be contracted long term. So we're talking 20-year offtake agreements at known pricing. So that really helps drive the financing of the projects themselves. And we have multiple growth vectors. So we have our core facilities, which I'll spend most of my time on, but we've also entered into licensing agreements for Europe. And we also have a great opportunity in PFAS destruction. So that's polyfluorinated alkyl substance, but you all will recognize it as the forever chemicals. We've demonstrated the destruction of PFAS with our technology. So really the summary is, strong margin profile with a lot of non-dilutive project level financing. So I want to touch quickly on the strategic partners because I think they are important to address. So ArcelorMittal is the second largest steel and mining company in the world. They invested in CHAR Tech in 2023 after undertaking a pretty extensive technology review around the world on who can drive decarbonization in these hard-to-abate industries like steel making. So they made that investment. And they're also our primary off-taker in Ontario. So we're building our first project in Southern Ontario. And Canada's largest steel mill, which is owned by ArcelorMittal, Dofasco, is the primary off-taker of that product. Second strategic partner is the BMI Group. So the BMI Group invested in CHAR, but they've also put money directly into our project. So between two of our projects, they've committed $18 million. And they're a large-scale construction company and an asset owner. So they buy used pulp and paper plants that are really well situated for our technology. And they have industrial development and construction teams as well. And then third is Indigenous partners. So as I'll talk about the technology in a couple slides, we're processing wood waste, we're processing biomass. And whenever you look at a biomass project, feedstock sourcing and security is critical. And so for us, having this partnership with Lake Nipigon Forest Management Inc., which is a First Nations led company. The 4 shareholders of the company are the 4 First Nations that operate about 1 million hectares of land near Lake Nipigon, which is just north of Thunder Bay. And since this is an international conference, if you don't know where Thunder Bay is, it's at the top northwestern point of Lake Superior. So really, really big forestry area, great opportunity to work and collaborate there. Now with the time limit, I'm going to skip over maybe a couple slides here just to make sure. I want to leave lots of room for Q&A because I find that's always important. But sort of this is where CHAR sits today, and this is where we're talking about kind of the from proof to platform. And what this is simultaneously we have kind of 3 milestones, 3 catalysts that are all coming together simultaneously. So these are first our first commercial facility starting to generate revenue. Second is our PFAS destruction technology has been validated. And 3 is the opportunity for some strategic growth as well. So what does that look like in terms of overall opportunities? So when we look at our Thorold facility, so that's our first plant we're building, 4.5 million in revenue coming online this year. And remember, this is our fiscal year. So our fiscal year starts October 1st. So really, it's 2 quarters of our fiscal year. 2027, we start producing biocarbon and renewable natural gas. And in 2028, we're at that one project is at 28 million a year in revenue. So that's our facility we're building. The second emerging vertical, this PFAS destruction, is huge. Biosolids is a huge challenge and a massive opportunity for us because we've validated, which I'll talk a little bit more about on the next slide, but we've validated the destruction of PFAS. And so when we look at our strategic growth opportunity, we'll talk a little bit more about it, but we have a couple of key projects that are all in process of either being under construction or in development that'll drive this revenue potential. So last slide on PFAS, and then I'll jump into the core technology. So we built a plant for Synagro, which is the largest biosolids processor in the United States. So they're owned by Goldman Sachs. We launched the project in May of last year, like we commissioned the project. And so it's actually at a commercially operating facility, taking real world biosolids, processing them through our high temperature pyrolysis technology and destroying that PFAS. And so why is this sort of a big issue? It's that currently biosolids have to be landfilled. And because of the contamination, it's a huge cost. We're talking like $100 a ton to landfill it. So that's where these large billion-dollar US numbers come from, is just how big of a risk it is that PFAS creates, and that there's almost 24,000 facilities in the United States alone that have this problem. So this is a really cool opportunity for us. And like I said, it's operating in the real world, and it's been demonstrated with a phenomenal strategic partner with Synagro. So that is an excellent opportunity for some really high margin growth. The primary opportunity, though, that we continue to be focused on is this high temperature pyrolysis. So that's what I'm going to talk about for the remainder of the slides here, is how that works, how that rolls out into our projects. So what we have here is a picture of wood waste. That's actually wood waste being collected at our Nipigon facility. So there's a sort of a piece of yellow iron in the background there, so you can get a sense of how much material it is. But wood waste is things like, treetops and tree limbs from forestry operations. It's sawdust or wood chips from processing. And there's a lot of it. There is an immense amount in Ontario and Quebec, which is where our focus is. We then take it and we process it through our high temperature pyrolysis process. So what this is a picture of is our pilot unit. So we commissioned this pilot unit back in 2018. It's in the corner of our Thorold facility, of our commercial plant. And basically what it does is we take wood waste, we basically cook it at 900 degrees Celsius in a continuous process, but under airlock. And so that means there's no oxygen and there's no air. And with no oxygen, the material can't burn, but what it can do is what's called thermochemically crack, and it thermochemically cracks into two products. One is a solid carbon, so that's what we call biocarbon, so that's what we can tailor for steelmaking, for decarbonization of these hard-to-abate industries. And then the other is a gas, and this gas we can convert into renewable natural gas. Why that's really relevant here in North America and in Ontario and in Quebec, within Canada, is that we can get 20-year offtake agreements for this gas. These 20-year offtake agreements are not linked to the price of natural gas. They are linked to Quebec CPI, and they're at a pretty significant premium. So when we say where the pricing has changed for these two products over a short number of years, well, we're talking $40 per gigajoule. To put that into perspective, Ontarians and Quebecers would pay $5 or $6 a gigajoule for gas delivered to their home for heating purposes or cooking or whatever they're using it for. And we would be able to contract our supply at $40. So that gives you a sense of the premium that's available right now under those 20-year offtake agreements. So that really makes these projects financeable, which is how we can go down this path of doing this mostly non-dilutively, bringing in non-recourse project debt because you have nice good counterparties with really secure offtake agreements. And that's one of the key elements to our ability to grow quickly in this market. So I mentioned on the first slide about 130 million in project revenue potential. So that's across these 4 projects. So Thorold is our first commercial plant that we're building. Lake Nipigon is second, and that one's started construction as well. And then Espanola and Saint Félicien are the other 2 that are in development, and we'd like to see those get into construction. Some civil works is potential this summer in 2026. It's always important to try and get civil works done in the summer in some of these northern locations because digging and pouring concrete in the winter in the north is not always easy. But then what we're presenting here is the revenue potential from the projects, and that's based on the RNG production and the biocoal or biocarbon production annually. And I think one of the things to take away from this slide when you look at project revenue and then the free cash flow is that there is a delta between sort of the OPEX and then the EBITDA and then the free cash flow, because we are looking at some good project level debt that should be available for these projects. So that's the short-term rollout. Of course, we have a pipeline of additional projects that are not as well developed. They're more in the feasibility stage, but these are the 4 projects that we can execute on in a very short amount of time and get to this revenue opportunity. And then, of course, I mentioned PFAS destruction and our Baltimore project. So this is a little bit more detail on Thorold and how those numbers roll out for a project. And this is illustrative for other projects as well. So this picture here is just demonstrating we are producing biocarbon today. That's a truckload of material going down the highway, down the Queen Elizabeth Way, which is the highway that links Thorold to Hamilton, where Dofasco is, and they're accepting the product. So we're selling it today. We received project level equity from really great strategic partners. We've been very successful at getting non-dilutive government funding as well. And as mentioned, sort of we'll get into biocarbon commissioning and larger production and sales as we move through this fiscal year. And then RNG comes online next fiscal, and then it kind of shows the breakdown. And you can see here really RNG is a big driver of revenue overall. And as I mentioned on the last slide, you can kind of see the breakdown of where sort of the revenue, the EBITDA, and then the final cash flow is with sort of the debt servicing requirement. But what that does is, of course, allow us to build these projects in a very non-dilutive fashion from a corporate shareholders' perspective. There's a picture of the Thorold facility coming online. So it is real. This was a little over a month ago now. I'm starting to not be able to take as broadly placed pictures because there's certain elements that we don't mind showing on a tour, but we don't necessarily always want to show in pictures everything we're doing. And that applies similarly to this picture, which was a little over a month ago as well. And it's quite zoomed in because, again, we don't want to show everything. But what I do want to show here is this is what a high temperature pyrolysis kiln looks like. So from an equipment perspective, there's some missing pieces still that we don't want to necessarily share either. But from a size of equipment and sort of relatively mechanically simple piece of equipment. And to give you a sense, you have a couple of fabricators there putting this thing together. That hole, so that's where the heat tube is that the biomass goes through, is 2.1 meters or about 7 feet in diameter. And then the second project that is really coming along here is Lake Nipigon. So again, growing that one. What's really exciting for us about the facility is that it's co-located with other forestry operations that the Lake Nipigon Forest Management Inc. is operating. So we can scale this pretty substantively. So we can, like with Thorold, we'll bring biocarbon online first because it's easiest and it's quick. We can then add RNG, renewable natural gas, and then we can double the capacity again because there is substantive biomass available. But that allows us to balance cash into the project pretty reasonably, get it built pretty quickly, and get to some pretty substantive project revenue numbers. So that 130 million project revenue number I presented, that's only for the first 2 phases of Lake Nipigon. It doesn't include that 2029 and beyond number. And to give you just again a sense of scale of these projects, they're big, but they're not massive, right? And I think that's another thing that's important, both from an approachability of how do we get so many projects built so quickly, is they're not mega billion-dollar biomass processing projects, and that de-risks it from a capital perspective, but importantly, it de-risks it from a biomass availability perspective. One of the big challenges and one of the big failures with biomass-related projects is they go too big to try and get that economy of scale in the processing, but then they're reliant on every single ton and kilogram of fiber in that wood basket. And if the market changes, and we know that the forestry market is certainly in a place of change, it just happens to be somewhat beneficial to us in the availability of biomass right now. But we know that change is going to keep happening. So we don't want to be so big that we need every single kilogram and ton of biomass in that basket, because disruptions, cost changes, supply changes, we don't want to risk our system being so heavily dependent on that. So having this scale of equipment doesn't rely heavily on all the biomass in the wood basket, still gives good returns, and is still quite manageable and profitable. So to give you a couple of pictures, we don't necessarily want to do construction in the winter, but the Lake Nipigon guys are pouring some foundations. This was from 2 weeks ago, and they're putting up some tents to start to store biomass chips for the project. And then one last quick slide here, just on the corporate profile. So as I mentioned, we do have some great strategic investors who are involved. We have, a site construction partner and a site landlord who has bought a number of pulp and paper mills where, there's biomass availability, there's feedstock handling, and we really fit perfectly into those facilities as they're redeveloped. So, a great strategic alignment there. And of course, ArcelorMittal, global steel and mining partner and off-taker and validator of the biocarbon products that we produce. And then insiders are about 15%. And then within the retail, it is still relatively tightly held. So there are a number of key long-term supportive shareholders that we're grateful for. So with that, tried to keep it quick and high level, and a summary of why this is such a awesome opportunity, why I'm mostly excited about it. This has been sort of a 10-year journey for me, and to see it coming to fruition is phenomenal. And this is really the transition year and the pivot year from a lot of the piloting, all the development work we've been doing over the years, to commercialization and execution, and it's enormously gratifying to be here. So happy to answer any questions from the group.
Andrew, that was such a phenomenal presentation, and all the graphics. I mean, how gorgeous is that? So thank you again for sharing all of that too, and keeping us on our toes with just a little sneak peek, but just not enough quite yet. It's a bit of a cliffhanger. So thank you so much for that one. There's a couple of questions that have come in, and we'll start off with this one. Carbon markets are evolving rapidly. How do you protect margins if policy shifts faster than infrastructure can adapt?
Yeah, great question. And I think it's important to distinguish a little bit when it comes to carbon markets. So our, the one that gets the most attention, and if we're talking particularly on biocarbon or biochar, is the voluntary carbon credit market. And that one is changing all the time. The carbon markets that we participate in, and just to make sure we're being clear, and I'm being clear, is more related to emissions. So we don't ourselves for the biocarbon generate carbon credits, but we do have the ability to layer on additional pricing to our end users, because they're seeing a reduction. So it's either directly to steel mills or other metallurgical applications where they're reducing their GHG emissions, and so they see the benefit and we see the benefit, or it's things like carbon border adjustment, where the products from the steel mills have to have a certain carbon intensity. So a US steel mill shipping to Europe has a really strong incentive. So when we talk about protecting against, where are these going to shift and how's it going to change, we are, I would say, mostly exposed to the European market, where it is always a risk when you're relying on government policies, for sure. I don't see it as a big risk that Europe's going to walk back carbon border adjustments and carbon pricing. If anything, I think with the U.S. administration, they may leverage that a bit with trade disputes. But as I pointed out in one of the Thorold slide, is the big revenue driver is the renewable natural gas, and that renewable natural gas is contracted at a fixed price plus inflation for 20 years. So if all carbon pricing disappears, we still have that contractual supply and offtake agreement with, really good creditworthy counterparties. For those who aren't familiar, the Canadian uh, gas market is generally a regulated monopoly. So once you're locked in, it's good. And sometimes it has the opposite effect of being difficult to work with. But we've fostered some really great relationships, and those are extremely secure contracts.
Well, that was a great answer. The second question that came in is CHAR a technology platform, a project developer, or ultimately an acquisition target for larger energy players?
All three.
Oh, and the plot
Um,
thickens.
yeah, yeah. So, and I don't want to say that kind of facetiously, but it is a great question, and it really is all three. And the reason it's all three is we have the technology platform, but the way to think about it and the way to think about our core competency is in process engineering. So how do
Mm,
we run the oven to make sure the inputs that go into it give us the outputs? We're
yeah.
not building conveyors and storage bins and oxidizers and tanks and reactors. Like, we're not designing all that stuff. We're getting it procured from existing companies that build all of that equipment because it's
Right.
proven and we don't have to take the risk. So from a technology platform, it's there for sure, but it's really, I would say, narrow on the high temperature pyrolysis kiln process and some of the gas treatment stuff. That's what we keep core. And so we're kind of in this unique perspective position, I should say, where we're also a project developer. And
Mhm.
as a project developer first, we have part of the technology platform, but not all of it. So we do continue to move towards more of a project developer where we hire an EPC to build the plant. We hire an owner's engineer to review. We don't have strong mechanical engineer. We don't have civil engineering. We participate in that conversation as the technology platform. So that's why, I say both. And I think it's really important because otherwise we're trying to build a huge engineering team to
Right.
reinvent the wheel on, 50% of the plant. Like it's not an effective use of capital, and it's not necessary.
Right.
And I think, therefore, for the third question, you know, are we building something that large energy companies might be interested in? I think so. Is it something that we're kind of planning around exiting anytime soon? I would say no. I think the opportunity to really build value in the company before that comes is over the next few years. But is it a target in the early stage? Yes. Is it something we may want to fend off until like 2030 when we're into the hundreds of millions in revenue, and we can really see accrete a shareholder value? I think that sort of makes a bit more sense to me. But if someone offered us $10 a share, would we take it? Sure. But that's probably not going to happen today.
Okay, so with those targets, what milestones over the next 12 months will prove to skeptics that this model scales profitably and not just conceptually?
Yeah, and it really is on the execution, right? Like, we have our first plant is into commissioning now. So
Mhm.
showing that we're able to produce the product, that the economics of that first phase of the project match what we're saying, I think is
Right.
crucial. And so being able to communicate more frequently to the market about what we're doing, why we're doing it, what we're up to, and what milestones and catalysts we're hitting, that
Mhm.
market communication becomes a lot easier as we're into production, we're through commissioning, we're getting another project rocking and rolling. And then, the keys are the offtake agreements and the non-dilutive project level financing, be it debt, be it grants, be it a combination.
So, you have a lot going on and it's very innovative what you're doing. And with that, we all know that in mining, yes, there is two steps forward, three steps back. In any actually industry, it's two steps forward, three steps back. So I'm sure that you're probably getting pushback on people going, I still want the traditional way. I still want to do it this way, or this is how it's always been done. How do you navigate through that actually?
Yeah, and the way we have to navigate, because we are working with large off takers, be it on the biocarbon side or the gas side, is meet them where they are. So for the gas side, it means, they've got a spec that has to go in the pipeline and has to meet their spec, and it's something we can do. So that one's relatively easy.
Mhm.
On the biocarbon side, it's, a steel mill is not going to put new infrastructure in place just to use a different product. Like
Right.
it's just not going to happen. And so recognizing that that's the constraint, we've
Mhm.
been working with ArcelorMittal, DeFasco, really since 2017 on what do you need to see in this product such that you can use it and you don't need to make those infrastructure changes. So from 2017, 2018 till 2023, we've been working with them, proving it out, scaling it up. And then in 2023 is when corporately they made their investment. As I showed in the picture, we're still sending them product, and as we bring Thorold online, we're going to send them more. But it's not a today thing. Like we've been working, and similar with PFAS, actually, we've been working with Synagro since 2017. So a lot of these groups take a long time to validate, but once you're validated, it's sort of okay, let's get going and let's get going yesterday. So that's why we're in such a exciting time right now.
You definitely are. You hit a key point there is meet them where they're at, and then you can grow from there. So Andrew, thank you again for chatting with us today. What's your website for all that are looking to learn more?
So it's chartechnologies.com, or you can email me, andrew.white@chartechnologies.com. And I think Galen's
We're
info is there, but my phone number is in all of our press releases, so you can
perfect. Okay,
track it down.
what's your ticker symbol? What's your platform?
Oh, our ticker TSX is yes, YES, to keep that
Easy.
positive energy going.
Perfect. Well, thank you so much again for your time. We look forward to hearing more.
Absolutely appreciate the opportunity. Thank you all.